Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial jargon that makes even accountants yawn. Today we're diving into DraftKings 2025 10K report, and let me tell you, it is a roller coaster of numbers and a few things that might make you raise an eyebrow. DraftKings, a company that has become synonymous with sports betting and more, has put out its annual performance report, and there is a lot to unpack here. From their revenue streams to the risks they're facing, it is a deep dive into how this digital entertainment giant is really doing. Let's jump straight into the financials because that is where the real story is. In 2025, DraftKings brought in a massive $6.05 billion in revenue. That is a huge jump, a 27% increase from 2024's $4.77 billion. Take a step back and think about that 27% growth in a single year. This means they're bringing in over $1 billion more from their customers than the year before. Where is all this money coming from? Well, their sportsbook offering is a massive driver of this growth. The total amount customers bet, or the handle as they call it, reached an astonishing $53.6 billion. That is billions with a B. This shows just how much people are engaging with their sports betting product. And they are making money on that handle. Their sportsbook net revenue margin improved to 7.1% from 6% last year. Now, 7.1% might not sound like much, but when you are dealing with billions in bets, the difference adds up significantly. It means they're keeping more of every dollar bet than they did previously. Their iGaming or online casino business also saw strong growth, with revenue hitting $1.8 billion. This part of the business is growing too, indicating a solid performance all around. But what about profitability? When we look at adjusted EBITDA, a measure of their core operating profit, we see a big change. It jumped from $181 million in 2024 to over $620 million in 2025. This indicates their operations are becoming much more efficient and profitable. Remember, in 2023, they were actually losing money on this measure. So this turnaround is pretty significant. And for the first time, they actually reported a net profit of $3.7 million. Now that might seem small compared to the billions in revenue, but it is a huge improvement from the $507 million loss they reported in 2024. This finally puts them in the black. DraftKings is also actively growing through acquisitions. In 2025, they acquired Railbird Technologies Incorporated, which is a move into the prediction market space. This shows they are not just growing their existing businesses, but also looking for new avenues to expand. And in 2024, they acquired Jackpocket, a digital lottery courier service. These moves are all about expanding their reach and diversifying their offerings. It is a strategy to capture more of the customer's entertainment spending. Now, while the company is growing and becoming profitable, there are significant risks that investors need to be aware of. A major theme throughout the filing is the constantly evolving legal and regulatory landscape they operate in. Laws around sports betting, iGaming, and even newer areas like prediction markets are still developing and can change quickly. This uncertainty is a major risk factor. They also depend on partnerships, particularly their relationships with casinos, tribes, and horse tracks to get market access in certain states. If these partnerships falter or not renewed, it could directly harm their ability to operate and grow. Cybersecurity is another big concern. Like many tech companies, DraftKings is a target for cyber attacks. A breach could compromise user data, damage their reputation, and lead to significant costs. They mention experiencing potential credential stuffing attacks, which is when bad actors try to use stolen login information to access accounts. DraftKings has also been actively buying back its own stock. They authorized up to $2 billion for share repurchases. In the last 3 months of 2025, they bought back over 7.7 million shares. This can be a good sign, showing management believes the stock is undervalued, but it also means they are using their cash reserves. Now let's talk about debt. DraftKings has quite a bit of debt on its books, over $1.8 billion, while they did secure a revolving credit facility and a Term B loan. They are also carrying convertible notes. This level of debt can make it harder to do business, especially if economic conditions worsen. An interesting point from the filing is their dual-class stock structure. This means that certain shareholders, like their CEO Jason Robbins, have more voting power per share than others. This gives him significant control over company decisions, which can limit the influence of other investors. DraftKings is also facing several patent infringement lawsuits. One significant one is from WinView Inc., alleging infringement of multiple patents related to their sports betting and daily fantasy sports offerings. These legal battles can be costly and time-consuming and could potentially impact their operations if they lose. A major risk they highlight is their sensitivity to discretionary consumer spending. If the economy tightens or people have less disposable income, gaming and entertainment are often the first things cut. This could directly impact DraftKings' revenue. So what is the big picture here? DraftKings is a company that is growing revenue rapidly and has finally achieved profitability. They are aggressively pursuing market share through acquisitions and expanding their product offerings. They are also managing their debt and investing in their technology. However, the company operates in a complex and rapidly changing regulatory environment with significant legal and cybersecurity risks. Their reliance on partnerships and their substantial debt are also factors to watch closely. The dual-class stock structure raises governance questions for some investors. Overall, DraftKings shows strong growth and a clear path to profitability, but with that growth comes significant risks that they are actively navigating. Now that is our breakdown of DraftKings 2025 10K. What do you think about their performance and the risks they're facing? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate filings, and don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.